Welcome to today's webinar, which we host in cooperation with our partner OMFIF, our Vice President David Marsh. Thank you very much for this cooperation. I think it's a great timing and a great topic about cryptocurrencies and what's going to be a cashless society. Today, the ECB published something on their consultations and found that citizens and professionals both value privacy most for possible future digital euro. I think something our panelists will really reflect on. This is the future. I'm really happy that the BCCG and OMFIF can collaborate on such great and important topics. I'm Ilka Hartmann, I'm the managing director, and we have so great experts. I don't want to take most of that time. Just some housekeeping. If you're not talking, just the panel, please keep the cameras on. Everybody else, shut the cameras off. That keeps a stable connection for all of us as well. You can ask questions all the time via the chat function. Or if you want to ask something directly, raise your hand. There is a button. David and I will follow the discussion, see if the questions are coming in, and do the Q&A the way it's the most common and easiest. So thank you very much, and thank you, David, for joining us, and thank you for taking the option and offering that you do the moderation, because you are the expert.
Well, I'll try to do my best, Ilka. Thank you very much indeed for organising this. I'm simply going to introduce the panellist, Phil Middleton, who's the chairman of the Digital Monetary Institute, an institute which OMFIF set up. Is going to say a few words in about 10 minutes to talk about some of the big questions affecting a cashless society and also the march towards possibly a digital euro. You'll say a few words, I think, about other aspects as well. We then have as our discussants three people, Nelixa Devlukia, who's the founder of Payments Solved, and Nelixa is going to be talking about issues connected with consumer protection and so on. We will then go on to Wolfram Seidemann, who's very well known in this community as the CEO of G&D Currency Technology, that's Giesing and Devrient. And then Philip Sandner from the Frankfurt School Blockchain Center will also be speaking. So without more ado, Phil, over to you. You are on mute.
Thank you, David. Good afternoon, everybody, and welcome to my new haircut, which Boris Johnson has very graciously allowed me to have this week. I'm not sure if it's an improvement. A couple of years ago, one was having a lot of very interesting theoretical discussions about central bank digital currency, digital payments, and the like, and it was all very philosophical. Now I think the question is not, are we going to have a digital or cashless society, but when? So if is no longer the question. And indeed, at the time of speaking, about 90 central banks around the world are currently engaged in projects of one sort or another to either examine the feasibility of digital fiat currency or to introduce it. So I think it really is a question, when are we going to see it and how are we going to see it, rather than if. And the COVID pandemic has accelerated that transition to a digital society extremely quickly, in terms of our online behavior, in terms of our inability to use cash. Although paradoxically, even though the use of cash for transactions has declined in many countries, the store of cash in people's homes has increased quite dramatically. Go figure, as they say. At the risk of teaching my grandmother how to make bratwurst, I'd just like to set out what some of the parameters around currency. And to suggest that in this debate there are four broad types of payment or currency, digital of instrument, that quite often get confused. So forgive me if I'm teaching the basics, but just so we're all starting on the same page, I take four broad categories. First, there is cash. For the economists amongst you, M0. This is issued by a central bank on behalf of a sovereign state or group of states. It is a fiat currency, i.e. it is not backed by anything, but it is backed by a sovereign state or parastatal's ability to impose taxation and so forth. Is issued in either, at the moment, coin or note form, is a bearer instrument, completely private, and is, to all intents and purposes, risk-free. So you can leave your €50 note in your trouser pocket, put that in the wash, and take the bedraggled note along to the ECB, and they'll issue you with a new one, provided they can read the serial numbers. So that's M0. We then have private money, the money that sits in our bank accounts, be it with Commerzbank or Sparkasse, wherever, or indeed Barclays. This is, for economists, M1, but it is effectively private money. And it's private money that it will exist either digitally or in checks or cards. It is less private, arguably less secure than cash, and theoretically it is at risk, although in most parts of the world, particularly in Europe, there are bank deposit guarantee schemes which fundamentally guarantee the value of that up to a very high level, €100,000 in the Eurozone, and the rough equivalent elsewhere. And that money, that private money electronically, has been what has boomed very much during the pandemic. That's what we've all been using for going to Amazon, and we may have used it via some other payment mechanisms like PayPal or Stripe, but essentially that's what we're going to be using. So that's the digital money that everyone, including my mum, is familiar with. And most people, most citizens, would not make the differentiation between that and cash. They see it as one and the same thing. The third element is what I call, or what is called, stablecoin, which is a private money, so issued by somebody private and non-bank private. And the most famous example is Diem, formerly Libra, formerly Facebook. One would imagine others will be launched, whether they be Amazon or supermarkets or what have you, which are backed by some real asset. And the real asset behind it is either fiat currency, so US dollars, pound sterling, or a physical asset such as gold. Theoretically, these are stable and have value. There are some, even though what you're passing around on your smartphone are digital tokens. Big arguments, big discussions between lawyers and indeed central bankers as to what these tokens actually are, and as to whether the link with the stable asset is actually valid or not. Discuss. And then finally, my fourth category, which we're not going to spend a great deal of time on today, is cryptocurrency, of which the most notable is Bitcoin, which this morning when I looked is now trading in certain quarters at $70,000 a coin. And Coin Exchange debuted yesterday on the New York Stock Exchange very, very successfully. Bitcoin ironically started off as a libertarian currency that was to free us all from central banks and authorities and allow peer-to-peer exchange as a payment instrument. That I think it's gone down a cul-de-sac. It's no longer a payment instrument. It is a speculative asset. Most regulators are seeing it as such. The most common question I get asked is, should I go and buy them? To which my answer is, it all depends on whether you think this is a black tulip or the next gold. But it's an asset, and a corporate treasurer, for example, may decide he or she wishes to hold some proportion of the company's money in Bitcoin because it's, as Elon Musk has done, allegedly buying 1.5 billion of them. But it's not a currency, and it's not payment. So I think for today we're focusing around digital central bank issued cash, otherwise known as central bank digital currency, otherwise known as CBDC. So that quickly clears the decks. And David and Ilka have put a number of discussion points in front of me that to get our conversation going.
Phil, you obviously won't have time to go through all of that before we get into the discussion. I just wonder if you could just give one answer to one question out of that list before we then go over to the panel discussion, and that is, how close are we to having a digital euro?
We're a long way off. The Chinese, I mean, we've seen a digital currency issued, the first one, the sand dollar in the Bahamas. We have seen the Chinese launching a massive beta test of a digital RMB, and experience in various other parts of the world. Interestingly, the Fed, the ECB, the Bank of England, and others are behind the curve, in my view, and we're still very much at the theoretical stage as far as the launch of a digital euro is concerned.
Well, let's bring you back in again a little bit later on. I just want to get the conversation going, and there will also be these questions via the chat function, so please do send in questions, those of you who are listening. Thanks very much, Phil, for setting us off there. And Alexa, could you tell us how you think this is going to play with the consumers, both in the continent of Europe, where the euro is the coinage, and also in Britain? You've done a lot of work on the regulatory side. What needs to be done to protect people, because they are going to be worried about the whole question of anonymity, privacy, and general security? You again are on mute.
It's the ongoing refrain of today, isn't it? You are on mute. It's thank you very much for that question, David. I think the regulatory framework is going to be very important as we move to a more cashless society. And I put that in the widest possible context because in many societies already, you know, we are very near to that cashless point. And that's why some, particularly, let's say in Sweden, have thought about issuing a digital currency so that they have a product in the market that has a direct consumer-facing relationship that is an alternate to cash. We are also seeing the move towards stablecoins, as Philip articulated. And I think that as we go forward, we will have digital money in the form of a central bank digital currency, a stable coin, and commercial bank money, because at the moment we have that as, whether you call it electronic money or digital money, but it's not paper notes and coins, and when you and I send it to each other, we don't actually see anything. You know, value passes between us on accounting systems between banks. And I think from a consumer perspective, the consumer protections and the regulatory framework is going to be hugely important, because who is going to understand the difference between the various products that they are using and what those protections actually are? If we take a working assumption that a CBDC will be treated as fiat, in respect of the regulatory framework that exists, say, in Europe and the UK today, where we have the Payment Services Directive, then there are certain consumer protections that flow when we make, electronic payments. If it goes to the wrong person, if it's for the wrong amount, there are organisations, banks primarily, but payment institutions or e-money institutions that have a regulatory obligation to help the consumer, put the consumer right if there has been a mistake. But that is not the situation when we look at stablecoins today. And what we have seen in order to try and mitigate, one, those consumer protection gaps, but two, also to support innovation, legislators in Europe and the UK put out proposals for a regulatory framework. In Europe, we have the proposed MiCA regulation. And interestingly, that does not, at this point in time, have any consumer protections made for payments using a stablecoin. In the UK, in contrast, HMT recently consulted, and one of the fundamentals of their consultation was that if we have a stable token, they called it a stable token, not a stable coin, within the UK, should it have the same consumer protections as other payment methods like electronic money or commercial bank deposits? And so consumer protection is at front of mind for regulators and legislators. We are seeing a divergence in approach, which I think is going to be problematical for consumers as this ecosystem evolves. But I think there are also other challenges beyond consumer protection because, and again, Philip touched upon the fact that commercial bank deposits have deposit guarantee, but actually a CBDC is better than a commercial bank deposit because it comes with a 100% guarantee. So we also have those market impacts of what does a CBDC actually mean for the banking industry. And
Yes,
how
well,
do they continue to function?
we'll be delving into that because I know that Philip Middleton's got some very strong views on that, how it might change the landscape. So thank you for those words, Nilix, and that's a really important question, I think, for the Chamber of Commerce, because don't forget this is a British Chamber of Commerce in Germany. So the contrasts and the similarities between what Britain is doing on the one hand and the EU countries on the other, as you've set them out, is very important. So we'll come back to that if there's time. Could we go over now to Wolfram Seidemann? The report that we heard today about the importance of privacy for the consumer in Europe is an important landmark. I think this confirms something that you have put your finger on already, Wolfram. And of course, your company does make both the banknotes and also you are in advanced technology systems as well for digital currencies. So you've got a foot in both camps here. Can you also tell us about the pros and cons of moving towards a cashless society? And will there be a peaceful coexistence between central bank digital currencies and good old-fashioned cash?
Yeah, thank you, David. Well, I think if we look at the data around the globe, we are far away from a cashless society. 80% of person-to-person transaction worldwide is been done in cash. And there are good reasons for it. And Phil started off this talk by naming a few of them. The only question is, how can we bring that value that cash brings to society, how can we transfer that into a digital future? Because if a business model is purely digital, you cannot pay there with public currency. And that forces you as a consumer to enter into a third-party contract. You have to subscribe with a private payment provider. So you have to pay a fee or your data will be used. And you can't enjoy the comfort that you can enjoy with cash where the user is independent from the issuer. And that huge value, I believe, is worth to preserve and to bring it into the digital age. And that would central bank digital currency be. And with that said, I truly believe that CBDC has to respect privacy also in a way that it's private by design, so that citizens can rely on when using, as an honest user, CBDC, that then no data is traced and tracked. Of course, we have to take care of transparency if we reach certain volumes or values, and existing AML and KYC processes need to be in place. On the other hand, for day-to-day spending, if you go to your pharmacy and buy your medicine, which, by the way, is mainly done in cash for private reasons, if you use a CBDC, you should enjoy the same rights in the same situation.
There is this difference, though, isn't there, between having privacy as and anonymity for the private transactions. A lot of people in Germany carry around large wads of banknotes because they don't really want the snooper state or the sleuthing state to be looking too much into their business. But there's also an issue about, and you mentioned money laundering, there's an issue about protecting the system from criminality. So how do you get the happy medium in that, Wolfram?
Yeah, I think at the end, we need to offer two different journeys. One is a fully private journey for lower amounts, where, for example, there's a card which carries digital value, and you can give it to your children, and they can go to the grocery store and purchase small amounts with it. On the other hand, there will be a registered journey if you want to pay larger volumes, where the KYC processes that the banking system offers already, where your commercial bank knows who you are, where you will register for or apply for a CBDC wallet that allows you to trade larger amounts, and so your ID is known. It's not necessarily linked to each transaction, but in case there is some misbehavior, it can be traced back, and we can ensure that transparency is in place.
Yes, and that's broadly comparable to the banking system, isn't it? Because if you are transacting through large amounts, then clearly those amounts can be tapped. Let's go on to Philip Sandner now, because Philip, you could tell us in a few words about the blockchain center at the school in Frankfurt. I think you're dealing with also a large number of large German commercial companies who see blockchain technology, for example, being very helpful in transactions. Philip Middleton also talked about Elon Musk, and I know we're not talking principally here about Bitcoin, but Bitcoin apparently can be used if you want to buy electric cars and so on. So do you see big business getting involved in this, and how is your school playing a role in that?
Yeah, thanks very much. Actually, indeed, I'm the head of the Frankfurt School Blockchain Center. That's an academic think tank sitting at the university, which is called Frankfurt School of Finance and Management in Frankfurt. And we are having around 10 employees and dealing with blockchain topics basically all day long. And this includes everything from crypto assets over digital euro to digital securities. And I can give you my very, very quick impression without taking too much time. So to be very honest, everything looked very promising a couple of years ago. And at that point of time, many companies, enterprises, Siemens, Daimler, Bosch, like the German companies, they have been very promisingly setting out what they could and want to do with blockchain technology. The same was true for banks around the world. But then, as always, implementation is not as easy. People get to know that with blockchain technology, once you're getting a little bit into operative details, then it's getting quite complex, because you need to align interests from multiple organizations and so on. And therefore, right now, my feeling is that in the German industry, and actually I would wonder in case it's different in other European countries, right? I think it's like this everywhere. But in Germany, I have observed that on behalf of the industry, not too much is happening. Yeah, we have a couple of leading companies out there, but given the breadth of the manufacturing, Mittelstand, medium-sized companies, there is not too much happening. There is a little bit more happening in the financial industry, because we have the German government creating a set of very good laws such that financial organizations can get started. But also, to be honest, this is nothing when you compare it to the crypto world, to the crypto startups, which are by definition acting worldwide, which are by definition have set up companies spanning in a network mode around the world. So that is where the dynamic is coming from at this point of time. And therefore, my observation is that 4 years ago, people said, blockchain yes, Bitcoin no. Blockchain yes, Bitcoin no. And now it's exactly the opposite. Bitcoin has risen, and blockchain is still there and has its promises, of course, right? But it takes a little bit longer than expected. And this, of course, also includes the central banks and the digital euro. And one more word on this. Well, I think we do need the digital euro for multiple reasons. The pandemic showed us that people are moving away from cash payments. So actually 70%, it really depends on how you measure it, but more and more people are using mobile payments and less physical cash. So on behalf of the central bank and their money, it gets a little bit out of control if you measure with what kind of payment method is being used. And therefore, I think it's very, very urgent that central banks in Europe and especially the ECB really picks up a little bit more speed and takes this serious, because we have in China a state-initiated system which is called Yuan or DCEP system, which is not just the carrier technology of the Chinese currency in the future, but they are also exploring whether this should be extended to other Asian countries and maybe even to Africa as a payment infrastructure.
Imagine this takes us back nicely to Philip Middleton. Thank you for your comments, Philip Sandner, about how we've seen the roles reversed of Bitcoin and blockchain. But Phil Middleton, you said earlier on, and you left us in suspense about the Chinese, as Philip Sandner has said, there is a big possibility that the yuan might be transferred to along the Belt and Road Initiative, for example. I noticed that the Green Party in Germany, Phil, has said it wants a digital euro as part of recovering European sovereignty. So how important, how really set on this do you think the ECB is? Because we do have a very efficient payment system already with the ECB. The SEPA system, for example, has been modified and has been enhanced, isn't it? So do you think, Phil Middleton, do you think the ECB's heart is really in this digital currency idea?
I think they're trying to make up their minds. And bear in mind, the People's Bank of China is and has been working on digital currencies since 2014. And it's doing it for 3 reasons. One, it wants to get rid of cash, even though it officially denies it. It does, because cash is dirty, inefficient, and has all kinds of features that the Chinese government doesn't really approve of. Secondly, they wish to bring the private financial sector in China under control, and to make it absolutely clear that the only people who are allowed to issue fiat currency or any kind of payment currency within China is the Chinese government. And thirdly, as Philip has alluded to, I think they are looking eventually to drive the DCEP, the digital RMB, down the Belt and Road into Africa, Middle East, and elsewhere, as part of a challenge to preeminence in the global financial system, and ultimately to challenge the reserve currency preeminence of the US dollar. So I think for the for Europe and for the ECB, there's a big philosophical question about, and you know this, David, more than others. Jacques Trichet told you very clearly that the euro as a major reserve currency was what was a key objective of the ECB at the time of the foundation. So I think there's a big philosophical question as an expression of sovereignty and as a projection of sovereign power, whether the EU wishes to continue down that path, in which case I think it is unavoidable that you have a digital euro.
Yes, well, that I think does set the scene. I mean, this is where it brings us also nicely to Nelixa, because I've got also some questions coming in, one of which is just going to go to Wolfram in a moment. But before we go on to Wolfram and Nelixa, will the consumer be squeezed by this big power politics going on? You've got the digital euro, you've got the Chinese, even, as I say, even the Green Party want there to be a digital euro. Will the poor old consumer somehow be left out of all this big power bargaining?
Well, I don't think the consumer has any power bargaining in the first place. I mean, on one side, I think that, you have the benefit of consumer choice. And that, I'm sure, has got to be a good thing. The challenge, I think, is going to be consumer understanding of what protections do I have, because most people don't think about it until it actually goes wrong. We've seen that with the pandemic and the difficulty that people have had in getting refunds for certain holidays or products or airline tickets because of the different protections that exist. And I think that generally, because of what happened, consumers are more aware now. But when you have something that you use predominantly, probably on your mobile phone, and you use it to buy goods or services, it's not going to look and feel any different to commercial bank money or CBDC or stablecoins. They're all going to operate. There might be a different customer interface, or one might be nicer, and one might be free because I'm paying with my data and not with the sort of upfront cost. But as a consumer, I'm probably going to choose the one that's the easiest for me to use, has the most functionality that is appropriate to me, so it can all be tailored because of the digital world that we're moving into. But, will I knowingly choose one payment mechanism over another? I think is in question. I mean, I think consumers are becoming better informed, but I do think there is a question mark as to what the protections should be, and who will be responsible for those protections, particularly when we're talking about stablecoins.
Yes, well, yes, please, Wolfram.
The difference between CBDC and any other electronic payment will be that CBDC is public tender. So it will be accepted by everyone. And that's the biggest and the largest potential to standardize.
Well,
please.
Well, but acceptance depends on ability to use it. So yes, it's legal tender, so it has to be accepted. But that's only going to work if behind, the issuance, there's an acceptance ecosystem. I mean, I know that in the document the ECB published today, people said, yes, we would support it, we would use it, but you have to be able to use it. It's no good if I could just say, yeah, it's great, but I can't go to my local store and actually buy the newspaper that I want to. So I think,
but as you say, Nelixa, this system could actually be safer because it's 100% guaranteed, isn't it? Unlike, say, money in the bank, where there's a limit. So people would have to be aware of that. Could I just go back to you, Wolfram, now on the question which has just come in from Roland Kluse about Bitcoin? This might be an area where you either know the answer or you'd be able to speculate on it. Roland, who's just kindly switched on his camera here, he says that Bitcoin, as well as being a spectacular speculation tool, is facilitating an international money laundering network. Roland says that with a great deal of certainty. When, Wolfram, when would you expect government authorities to intervene to do something about this?
Well, this is really a bit speculative, since I'm not in that dark matter involved. But we see a lot of regulation around the globe on Bitcoin and cryptocurrencies as such. So currently, they are treated like assets, investment assets. And I think that authorities pretty much observe what's going on there.
Yes, I don't know, Roland, whether you can switch on your microphone and talk to us, because it's very interesting what Philip Sandner said just now, that we've seen a switch over the last 4 years, despite everything that Philip Middleton says about how risky Bitcoin is. It clearly is going through the roof, and lots of people are speculating in it. Are you able to talk to us? I don't know whether your microphone can be switched on.
There's just an article in The Economist, which is basically putting up the theory that there is this network of money laundering facilitated by Bitcoin and other currencies of this nature. And it's naturally the question, at which point will this be a problem for governments, and at which time do they want to get control of it? And okay, you're saying, well, they are observing it, but if you look at the total volume at this point, it's $2 trillion US dollars. So at which point will that be? Will it be a 10 billion or any guess in that regard? Because the moment the governments are going to intervene, I would suspect that the speculative bubble will possibly burst. Today we got Coinbase being launched in the US stock exchange. Everybody looking for the initial price. 250 is the price at this point, which will be higher than the conventional bourses like Nasdaq.
That's right. No, I read that myself. Philip Middleton. As you say, could get out of hand. Philip Middleton, do you have an answer to Ronan Kluse's question? No, you have to switch on your microphone, I'm afraid.
Thank you, I will. It's a strange system on this one. I think in terms of money laundering, yes, Bitcoin is being used in some parts of the world, some parts of the web for money laundering. Actually, although there's probably quite a chunk of it going on, in comparison with the amount of money laundering going on using cash, or particularly dollars, or using other stuff, it's comparatively small. And regulators, I would argue, are less concerned about money laundering privately than they are about threats to consumers. And where the regulations are going very much at the moment, seeing them from the SEC, we've seen them elsewhere in the world, what they're saying is these things are institutional only plays. If you're a big bank or a big private investor and you want to go and play with these things, fine, don't expect any fiat protection, and anybody who tries to sell them to ordinary citizens and encourage them to deal in them are going to find themselves regulated extraordinarily closely. Bear in mind as well, those of you who have teenage sons and daughters, there is an absolutely massive market in in-game cryptocurrencies. So your daughter will be taking her pocket money and handing it over to Roblox, for example, in order to buy a magic sword and an invisible cape in some multiplayer fantasy role game. And that's actually, in some ways, bigger than Bitcoin. So there are something like 1,500 cryptocurrencies currently in use in the world at the moment. Some of them are completely obscure. Some of them get a fair volume. But
let's persevere with that theme. Thank you, Phil. I want to go back to Philip Sandner, because you're the one that brought in the issue about Bitcoin now there being a boom. Well, two questions here to you, Philip. Is one of the reasons for this extraordinary interest in Bitcoin the fact that money in the bank gets a negative interest rate quite often, particularly in the euro area, and therefore people automatically fly into these areas of speculation, where, as Philip Middleton is saying, they could easily fall down. They're facing all sorts of risks. And then secondly, do you think that sooner or later, as Philip Middleton is saying, this market, once it becomes bigger, the Bitcoin market will be regulated out of existence?
Well, it's really difficult to foresee the future. I think this is clear, and therefore please accept that I have exactly the opposite opinion. Bitcoin is not a hype. Bitcoin is there. Bitcoin remains there. And Bitcoin will also not collapse, by the way. Bitcoin, you have to really see that the price development of Bitcoin now is rising since 7 years, but admittedly with a very high short-term volatility. But if you zoom out for a couple of years, then you see it's a long-term trend going upwards. And therefore, I don't see anything which would stop this trend from going upwards. Therefore, what we...
And may I ask you a private question? Lots of perfectly reasonable people, some of my friends, they own Bitcoin. Do you own Bitcoin yourself, Philip?
I own a little bit, and actually I'm very happy with it because it forced me to really dig into all this since 4 years, 24/7, and therefore I invested so much time that I feel that I can express this opinion quite directly.
I mean, that's some of my friends say the same. I mean, what proportion of your assets would you put into Bitcoin, just as a rule of thumb?
Of course, you know how it is. Everybody needs to decide this himself. I don't want to be the guilty one when somebody makes a wrong decision, but I think it really does make sense to have there, I don't know, 5% plus minus. And the reason is the following, we have negative interest coming up. We have debt crises of governments coming up. We have excessive money printing going on behalf of central banks. And then we have demand from corporate companies and from asset managers. That's the demand side of Bitcoin, right? And on the supply side, right now, we have 900 Bitcoins being generated day by day. And the number of the supply will decrease over the next years. That's technically guaranteed. So now what happens if you have like an excess demand hitting a stable or shrinking supply? The price rises, right? And that's not a deflationary asset. That's the wrong interpretation, because what we are seeing here is a digital commodity on the rise, seeking a bandwidth for a fair valuation. Gold has 10 or 11 trillions of valuation, but it could also have 8 or 15, who knows, but it has 10 or 11. And Bitcoin, in my mind, as a digital commodity, is in search of such a bandwidth of an appropriate valuation. But it's,
yes, well, thank you for making that statement. I mean, as I say, perfectly respectable people do own Bitcoin, and Philip is one of them. And maybe one of the things we should be doing is asking central bankers, as private people, whether they own Bitcoin. Could I just bring you back?
I also hold Bitcoin, although I'm not as respectable as Philip is. But just to observe a number of things. One, gold.
Could I just hit you on the line? What proportion of your very large amount of assets, Phil Middleton, do you have in Bitcoin?
Oh, I'm just a poor, totally underpaid director of OMFIF. I don't have any assets whatsoever.
But when you say 5% is the right total?
No, it's very small, and I hold it purely as a speculation in the same way as I would occasionally once a year put a bet on the Grand National. It's simply that. Bear in mind that Bitcoin has no asset backing whatsoever. It's a bit of computer code. So there's no stake behind it. Gold can always, even if you can't spend it, you can make jewelry out of it. There is a demand. 98% of gold is used for other purposes. 3% of Bitcoin owners hold 97% of Bitcoin by value, and 40% of it is orphaned, i.e. the supposed owners have lost either the hard drive on which it's stored or can't remember the password. It is a completely rigged market. Now, you can make money in this completely rigged market, but you have to bear in mind that what you're doing with Bitcoin is going into a casino where the house has tilted the wheel so the ball stops on particular numbers.
Yes, okay. Well, look, we understand that. It's really good that the two of you, although you've got contrasting views, you both own a little bit of Bitcoin. Can I just go back to the consumers here, Nilik? So you are very much the consumer champion here today. The people that you speak to in your business, are they dabbling in Bitcoin, or are they worried about all kinds of other things?
So apologies, but my connection is not too stable at the moment. David, could you repeat that?
Yes. Are the people that you deal with in your day-to-day business, are they actually dabbling themselves in Bitcoin as our two Philips are doing, or are they worried about all kinds of other facets of the cashless society?
So I think, yes, there are people from all walks of life who are dabbling in Bitcoin or other types of crypto assets. That is actually fueled, I think, by accessibility, because we can have apps on our phone. that give us access to these assets, and we can buy little bits of them. And so I think that that investment market, aside from Bitcoin, is actually growing with, you know, more people, and I think also probably with a younger generation, because of the accessibility of the asset, the accessibility of the information, and the fact that you can do it all off your mobile phone. Are consumers vexed or troubled by consumer protections? Probably most of the time not, because most of the time when we buy things, it works well and we haven't got to worry about it. These issues only come up as and when something goes wrong. But I just wanted to pick up on a privacy point that you made earlier and Wolfram touched upon. We're all, I believe, as consumers, concerned about privacy. But I think when we're talking particularly about central bank digital currency, we need to sort of split it out into layers, because if I want my central bank digital currency to have the functionality of cash, yes, then you can talk about the equivalent privacy and okay, you know the word I want to say, but I can't say it, that comes with cash.
Yes, your line seems to have suddenly gone dead here, but I think we know that what you were getting on to say.
Flows.
Good. Your line is a bit indistinct, and it might be better if we turned off our videos here. That might make it a bit easier. Can you still hear me, Nalixa? If not, could I ask Wolfram to, I think you wanted to say something, Wolfram, at that stage when Nalixa was speaking. Wolfram, do you want to come in on this point that Nalixa was just making? Wolfram, are you able to? Yes.
Yeah.
I think you had a point. You had a point you wanted to make, I think.
No, I mean, we have here a very large topic to discuss about, and I think it's very good the way how Nalixa is approaching it from a user's perspective. And I think also here we need to understand what privacy means for users, because we may have valued judgment of privacy. People buy things and pay with cash because they want to stay private, and then they make a photograph and post it on a social network where they just bought something or where they enjoyed themselves. So I think that we need to sort it out very clearly. However, as I mentioned already in my previous statement, I believe that there is a room for a public digital format of payment. For both reasons, for the consumers, many of those in the world are unbanked or underbanked, and we also need to include them into the digital world. And also for the reasons of global competitiveness, where currencies compete against each other as well, and where, speaking for the euro, we need to also maintain our digital sovereignty, which also includes payment and the currency as such. So I believe that there will be, there's a need and there will be room for positioning such a payment instrument. And that has nothing to do with the technology. Philip Sander mentioned blockchain as a very powerful crypto technology that allows to create new business models and that allows to exclude the middleman in a transaction, which enables us to develop much more efficient business models that we have established today.
Well, that's a good point, because if we are going to talk about these business models, I'd like Philip Sander to come in here. You said earlier that you felt some of the large companies were not taking advantage of blockchain opportunities. In terms of payments in general, though, we're clearly going to see the banks being disintermediated, aren't we? And you are going to be seeing new forms of cross-border payments coming in, which could be very wealth enhancing or income enhancing for many people in emerging market economies, for example. Do you see, Philip, Philip Santner in Germany, a lot of smaller companies which are trying to get into this area, because this is an area where there is a lot of growth, maybe in the smaller companies rather than the large companies that you were talking about earlier.
Yeah, I think what we are currently observing is that that regulation is indeed very important because it provides some kind of certainty, some kind of certainty for businesses to invest money, right? I think that's what we see in the financial domain in Germany, that now that we in Germany have a couple of laws which have been created and another couple of European laws that are coming, then now you're getting some kind of business activity being started because companies with budgets are now asking law firms to do something and so on. So there is some kind of dynamic evolving, luckily and finally. But I have also to admit that the German laws, they are good, but not very good. And therefore, already now, I would say that Switzerland is ahead of Germany by 3 or 4 years, because you could also deploy equity on blockchain basis, which is not possible in Germany right now, and which is not even on the radar, right? And a last quick point I would like to make, what does develop quite nicely in Germany is that commercial banks have picked up on the digital euro topic to supply the digital euro to companies in their business relations, such that you can put the euro in smart contract for automation purposes. And that's very interesting. And I'm very happy that the commercial banks, it's 3 in Germany. I can also tell the names if needed, but don't want to go too much into detail, but that these private banks, that they have really took up speed. And as banks, they have took up speed. And now by 2021, this year, they will supply the digital euro as commercial bank money.
I see. You don't have to say the names, but 3 seems to be a rather small number, actually, out of, there's 200 banks just in the private Bankenverband, aren't they? So this seems to me not a large number, but maybe they're very dynamic. These banks. But I think that is a really interesting question. I want to go to Philip Middleton on this, the point about the banks and this will do to their business models. But first, Nelixa, Mr. Lutz has put in a point from the audience, and maybe you could just comment on this. It's not really a question, but it's a comment. He says, I find it really concerning that somebody really thinks that Bitcoin is 100% money laundering. I think he was referring to the question from Willem Kreuzer. He says, actually, it's much more difficult to exchange back Bitcoin, backed fiat money, than it is to do money laundering. I don't know where Mr. Lutz gets his information, but would you agree with that? I've heard that myself. And when you try to exchange Bitcoin back into real money, it is extremely difficult and you get asked all kinds of questions. Would you agree with that comment from Mr. Lutz, Nelixa? You have to switch your microphone on again, I'm afraid.
Yeah, the technology is not with me today, is it? I can't. I don't think I can comment too much. I mean, the point is that when you exchange fiat for Bitcoin and vice versa, is when the regulations kick in, because it's the exchanges that are subject to AML regulation, etc., etc., etc. So that's how legislators and government have tried to sort of manage the risk, and in particular the AML risk that Bitcoin brings. And so that's why you have to ask these questions. How problematic or difficult it is not something I can actually comment on, but I'm sure that it also varies from jurisdiction to jurisdiction.
Yes, it does.
How it's managed.
Look, there's several more questions come in. And also, we only have 6 minutes left. So I just want to put one question to you, Philip Middleton. And this is about the Coinbase listing. What does this tell us, this extraordinary price that you mentioned earlier? Does this show that, as I think Philip Sandner was saying, it's all because of grotesquely easy money by the world central banks, that these kind of speculative bubbles do take place? Or is this telling us something real about the future, this huge price that you mentioned earlier? This is a question from the audience.
I think this is all the classic signs of an asset bubble overheating. I mean, we haven't talked about the NFT, non-fungible tokens, where somebody pays $68 million for a digital painting, supposedly original digital, when you can see the copy digital. My head doesn't. We are starting to get into black tulip territory. Some of it will will turn out to be completely ephemeral and a bit like WeWork, for example. Some of it will have a basis. Coinbase, I think, actually is evidence of the advent of the digital economy. And I think there are some businesses that are coming to market and are there, and businesses like Wolfram's, for example, that are driving us forward to a different structure of payments economy, all of which I think will be destabilizing for a lot of current commercial banks, many of whom are set up for a very different type of economy. So I wouldn't blanket everything and say, no, everything is going to get wiped out, but I think we are generally economically, and with Mr. Biden, President Biden, pumping a thick end of $2 trillion into the American economy, we are, I think, inflating a bubble which is going to burst. Obviously, different people may choose to differ on that view.
Yeah, I'm just going to ask all four of you now at the end. You've all got one question I'm going to put, and I'm going to let Wolfram Seidemann have the last word on this. So you've got lots of things to say, but it's a crystal ball. Starting off with you with Alexa, how will people see the changes in their consumer landscape, say over the next 5 years, as a result of increased use of digital currencies? For example, will there be a Chinese renminbi which will be offered to ordinary people in shoppers? Will you be able to pay for your holidays abroad with an e-yuan? Look into the crystal ball. Tell us how you think life will change for the ordinary person, the consumer, that you have a lot to do with.
I think the extraterritorial nature of these sorts of currencies is not going to be within the next 5 years. I think that if we're talking about digital yuan, it rolls out, Chinese citizens are probably going to be able to use it somehow as they travel abroad. But will it be available to non-Chinese citizens for the foreseeable future? I don't see that happening.
Okay, since time is short, I'm going to ask the same question to Philip Sandner.
Well, it's really not easy to see what's going on here. You know, it's exposed. It's always very easy to describe what happened and then try to make theories about what exactly happened. But you know, when we are in this entire development right now, it's basically not possible to really say what's going on. And actually, I myself have promoted blockchain technology 3 years ago, and if I observe it afterwards, I also have to say that most of these promises didn't really catch up. I think digital euro is one of the key topics out there, and happy to have private banks pushing this topic when the ECB is actually so extremely slow on this regard. And therefore, I think we have to speed up in Europe, but that's not just the ECB. This also implies the national central banks, because we need to also have like a digital platform to move money around when the Chinese guys
we will certainly see a lot of speeding up somewhere. We don't quite know where it's going to be. Philip Middleton, rather than asking you this crystal ball question, I've got a question from the audience which has just come in and is tailor-made for you. And then Wolfram, you'll have the final word looking into your crystal ball and your forecast. But the special question for you, Philip Middleton, is would central banks be able, if they wanted to devalue significantly the CBDC holdings of individuals by imposing some sort of very draconian negative interest rate? Would that be a fear for you of the CBDC being introduced?
Short answer is yes, that central bankers do like CBDC because it enables them to conduct monetary policy more easily and if they wish. So when the history of the payment world is written, historians will look at the day last February when the Chinese government launched a digital currency beta test to 50 million citizens, and the American government sent out paper checks to its citizens. And my view is if a digital euro doesn't get introduced very, very quickly, we will soon be looking at a very, very quaint paper currency circulating in this thing called the Eurozone. Ditto in the United Kingdom, for that matter.
Yes, well, so lots of challenges, lots of question marks, lots of questions coming in right in the last moment. So Wolfram, look into the crystal ball, tell us how the landscape will change. Also, 2 questions have just come in the last moment. Maybe you could say a few words about China, Wolfram, in your final remarks.
Yeah, well, clearly, without doubt, the world become more digital, and we need to also preserve the value that central bank currency brings to society. And that will look different in Europe than in China. In China, a digital yuan is the same as paying with Alibaba or Tencent, Alipay, or with WeChat Pay, but just operated by the central bank for transparency reasons. And in Europe, we expect that to look different. We look at a system that is not disrupting the financial system, but using the banks with their processes, with their KYC and anti-money laundering procedures, and offer the public a simple, easy solution that they allow everyone to participate in the digital world. And that's not a sophisticated tech solution where you have to have complex technology and equipment to run it, but that must be simple, and it must be include everyone. That will be a digital euro, and there are solutions for it. They're not blockchain driven, because blockchain are, in my opinion, for different applications. They're very good in automating transactions and automating business models, but not for payment and not for a digital currency. But I see the future being offer more alternatives, and central banks issuing not only paper money but also public currency in a digital format.
And there will be a cohabitation between cash and the digital.
I do think so, yes, because people also like the touch and feel of the real money that they want to put under their mattress in crisis situations.
Yeah, well, thank you. I'm going to hand back to Ilka in a moment. There's quite a few questions still on the table about, say, national security repercussions and so on of China. We could have a fascinating discussion on this regarding China applied to Britain and Germany. That might be another subject altogether, Ilka, and we can get some Chinese experts on this as well. But I'd like to thank the panelists for their excellent answers to my questions, and also those in the audience have put in very good questions as well. We've run out of time now, but there's been more questions than we could possibly answer. But it's a sign, Ilka, of the great interest in this subject. So we look forward to promoting this further. Also, the Digital Monetary Institute that OMFIF has set up is there basically to try to answer those questions, along with a lot of central banks around the world. Wolfram plays a big role in that. I know that Philip Sandner, your team, is also very active in that area. We look forward to collaborating further with you. Elixir, thank you very much for being part of it as well. You've really added to our understanding of the subject. So back to you, Ilka.
Well, I'm overwhelmed, and thank you all. Thank all the panelists, and thank you, David, for this marvelous moderation. It was not easy to get everybody in the right spot. You did a fabulous job. Thank you for that. So much interest, so much to talk about, and this topic will develop. So I think we should agree today already that we will continue this webinar, that we will touch up on developments in a few months, that we might include what's going on between the UK and China. Thank you for the audience for the high interest. We will put this in our link that we sent as a thank you note to all of you, so you can look if you missed some of the topics or the remarks that were made. Thank you. And I think thank you, David, for the idea. You raised the topic that was, you had the right sense that this was very interesting. The day was marvelous. We didn't know that the ECB would bring out their report today, but yeah, luck has to be in the game as well. I wish you all very well. Stay healthy, stay tuned to OMFIF and BCCG. And if you have any topics that you would like to have discussed on a webinar like this, we are open to receive your ideas as well. So once again, thank you very much, and we will continue